Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on Monday, May 31st, Memorial Day 2021. And first, I would just like to recognize those who have served and those families who have given the ultimate sacrifice. Thank you, and we owe you a debt of gratitude forever. We'll never be able to fully repay you. Now, in this video, I'm going to just give a quick update of where precious metals are as the summer unofficially begins. And so we've had this strong move, and some are probably curious as to, when could we get the next correction, or how much farther could this move go? And so starting off, I have here just a daily bar chart of GDXJ, gold, and silver. And I'm highlighting GDXJ because most of us, we invest in the juniors more so than the seniors, which is GDX. But anyway, as we can see here, and we'll go one by one, GDXJ has a little bit more upside. It's just below 55. It could push higher to around 58. So we can see there is a little bit, maybe more than a little bit of room for GDXJ to move before it hits resistance. The same thing could be said with gold. Gold's over 1900 now, had a very strong monthly close. It closed May. That was actually the third highest monthly close ever. But looking at this chart, we know there's stiff resistance around 1950. There's a little bit around 1920. So gold, we're probably going to see a bit more gains here in gold, but I don't think this leg is going to continue. That would be my guess. I don't see it continuing past 1950. That's an area where we'll probably see some selling. Silver is more interesting to me. Silver, it failed to close the week and the month above 2850. That's really the breakout level. So it failed to do that. The other point about silver is right now, if we're transitioning just for a little while into an environment of there's more questions about growth, and maybe we've hit a peak in fears of inflation for the time being. In that kind of environment, that, at least temporarily, is going to favor gold over silver and the other commodities. And that's what we've seen. In fact, over the last 2 months, gold has outperformed silver. Gold has made higher highs in this rebound, although prior to that, silver had been much stronger. So silver in this type of environment, whether it continues for, I don't know, a month or two or 6 months, I don't know. But while we're in it and capital is flowing in that particular way, a little more defensive, you're going to see gold outperform silver. So that's a little bit why silver has not been able to break out yet. So just keep an eye on silver. If it doesn't break out here and it's consolidates or corrects a little bit, it's not the end of the world. It's perfectly fine. It's perfectly normal. Next, let's take a look at this correction analog chart. And so I was looking at basically corrections during bull markets in gold. So there's 6 major ones in my opinion. So I have there in blue, that's the average of 3 corrections: 2004 to 2005, 2008, and then the 2016 correction. So I was looking at some that are a possible similarity to where we are now. There's no perfect comparison. And then you have the average of 6, which is 3 other ones in those 3 in red. But what's interesting to me is look at the arrow. That's where gold is now. It's following the analog pretty closely, actually. But as you can see, what the analog argues is that we're probably going to see a correction, but a bullish consolidation. That's an ascending, both those lines, they show an ascending triangle pattern for most of the second half of the year. But at the very end of the year, it gives way to the beginning of a launch. So we'll see where this move ends in gold, whether it's at 1950 or if it's able to actually reach 2000. And I'm wrong about the rebound continuing. Either way, the history here makes the argument that gold will need to consolidate before the real launch begins. Even though that's a consolidation, we should note, that's clearly a bullish consolidation. Now, you guys know that I love to look at ratio charts, and there's several ratio charts that are very significant, but because a lot of them are showing these patterns that you can see in this chart. However, this ratio chart, specifically GDX against gold, which will be followed by GDXJ against gold there at the bottom, these charts are looking like the first ratio charts to have the massive breakout from that 7 to 8 year bottoming base. I mean, look at the top there, GDX against gold. That ratio chart is pretty damn close to breaking out. And if and when we see these ratios break out, I mean, it's breaking out of a 7 or 8 year base. That is a real breakout, in my opinion. I mean, nowadays it kind of irks me, but at every little move, people are calling it a breakout. I mean, when you make new highs in these charts here, that's a real breakout, a multi-year breakout from 7-8 year resistance. That's a massive breakout, and what it tells you is that if and when it happens, gold stocks are going to strongly outperform gold, and at least for a couple years. And guys, this is really significant. And I wrote about this in my article a couple days ago. And we have not been in an environment where gold stocks dramatically outperform gold. I mean, since 2000 to 2005, basically. So there's this psychology outside of gold bugs, basically, psychology amongst generalist investors and other investors, where gold stocks are bad. They don't want to own gold stocks. If they're bullish on gold, they just want to own gold. They want to avoid gold stocks. So that's been the psychology over the last 10 to 15 years. And what these charts here are telling you is we are going to see a massive shift in that. And we're going to see gold stocks dramatically outperforming gold. Again, this hasn't happened since the early 2000s. So we're looking at, kind of these macro relationships in the broader markets, and then within precious metals. This could be the real story, I think, over the next 3, 6, 12 months. Keep an eye on these ratios. Extremely significant. Gold stocks are headed to dramatically outperform gold over the next year or two. And finally, here we have the weekly bar charts, and we can see SIL at the bottom, the larger silver stocks, which are not purely silver stocks anymore because they have a lot of gold in there. They own some gold mines, so they're silver and gold producers. But that aside, you can see SIL at the bottom. That's rallying up to resistance. So it's possible that could pull back, consolidate for a little while, before attempting another breakout. I'm not sure it's going to break out here, but hey, I could be wrong. It's definitely possible. But getting back to GDX and GDXJ, basically what we see, to sum it up, is they had a massive 7-year breakout last year, and they endured a pretty significant correction. But that correction is merely just a retest of the breakout. And so what we've seen, given the strength of the last 2 months, that tells us, okay, the retest of the breakout has been successful, and now it's time for the bullish trend to reassert itself. So that is something I am going to look for, obviously, over the months ahead. So there's your look at the short term, where we are, and then moving further out over the next couple quarters. We're in a very good position here. The market is really setting up. It's really exciting. I think that we probably have another, 3, 4, 5 months to really buy things cheap, because if you wait 6 or 12 months, odds are it's going to be really hard to find any cheap gold stocks, silver stocks, junior stocks, etc. Before you go, you can look at the link in the description. If you already haven't, you can check out a sample of my work. This is a free report on my top stock. This is a stock that I believe has 10-bagger potential over the next 2 to 3 years. Thank you so much for listening to this video. Hope you liked it. Let me know what you think, and I look forward to doing another update for you guys over the weeks ahead.